Hello, and welcome to MoneyWise AI. Today we're diving into a market that's often overlooked by international investors, Turkey's stock market. So why should Turkey be on your radar? Let's break it down. First, value. Turkish stocks are trading at some of the lowest price-to-earnings ratios globally. That means you're potentially getting more bang for your buck. And if Turkey's economy stabilizes further, these stocks could have serious upside. But let's be real. Low valuations come with risks, and we'll talk about those in a bit. Second, sectors with serious potential. Turkey has industries that are undervalued but backed by strong fundamentals. Here's the rundown. Banking and finance. Rising domestic demand is fueling growth for Turkish banks. Export-driven manufacturing. Turkey's location between Europe and Asia makes it an export powerhouse. Energy and renewables. Turkey's investing heavily in solar and wind, diversifying its energy mix. Tech and e-commerce. A young, tech-savvy population is driving a digital boom. Tourism and aviation. With record-breaking tourist numbers, this sector's soaring again. Now, let's get specific. Here are 5 Turkish stocks that long-term investors are watching closely, each tied to these high-growth sectors. 1. Türkiye İş Bankası, ticker ISCTR. This bank is a leader in Turkey with a rock-solid balance sheet. It's benefiting from growing credit demand and a stabilizing economy, and it pays consistent dividends, making it a favorite for stability seekers. 2. Tofaş Türk Otomobil Fabrikası, ticker TOASO. Tofaş is a major player in Turkey's manufacturing sector, specifically the auto industry. It has strong export contracts, particularly with Europe, and is pushing into electric vehicles, which is a big global trend. 3. Enerjisa Energy, ticker NJSA. Enerjisa is a renewable energy company at the forefront of Turkey's shift to cleaner energy. They're scaling up solar and wind projects and have steady cash flows from their electricity distribution business. 4. Hepsiburada, ticker HEPS. As Turkey's top e-commerce platform, Hepsiburada is perfectly positioned to ride the wave of a young, digital-first population and a booming online shopping market. 5. Türk Hava Yolları, ticker TİAV. Turkish Airlines is capitalizing on Turkey's tourism surge, as well as its strategic location in Istanbul, a major hub for international travel. The airline also has strong cargo operations, which provide a more stable source of income. Now let's talk risks, because investing in Turkey isn't for the faint of heart. The Turkish lira has been volatile against major currencies like the US dollar or the euro, and that can eat into your returns if you're converting profits. Inflation, while cooling, is still high by global standards. It was around 40% in 2023, and is projected at about 40% in 2025. This squeezes consumer spending power and can impact company profits. Geopolitical tensions and regulatory shifts can also create market swings, making Turkey riskier than more established markets. These risks are precisely why valuations are so attractive, but you need a strong stomach and a long-term mindset. Here's the bottom line. Turkey isn't your typical emerging market. It's an undervalued gem with several key sectors primed for growth. Stocks like İş Bankası, Tofaş, Enerjisa, Hepsiburada, and Turkish Airlines offer a mixture of value and upside for those willing to stomach the risks. Want more insights like this? Subscribe to our channel for a weekly dose of what's working in global markets and why. Stay tuned, stay invested, and remember, the smartest investments often come from the markets that the crowd is ignoring. See you next time.